All right, guys, welcome back for another video. Today's video will be about the Fibonacci sequence. It's a mathematical formula that is found pretty much everywhere in nature and describes a lot of the relationships that scientists observe in nature. Even now, we're looking at this spiral galaxy picture. Fibonacci ratios define the relationship between the clusters of stars within a galaxy spiral. So it's all the way down from a plant life, the arrangement of flower petals in a plant, all the way up at scale to an entire galaxy cluster. So this is a mathematical formula that's deeply woven into the fabric of life and the universe, and so it's hard. It also is woven into the fabric of the markets as well, because markets are comprised of human beings. Now, this video will be focusing primarily on the 618 retracement, but there are other, the Fibonacci sequence is essentially the addition of consecutive numbers. So think 1, 2, 3, 5, 8, 13, 21, 34, 55, and then, the sequence goes on from there. Now, the way I use the Fibonacci sequence in trading is primarily through the 618 retracement. And just going through the charts, I want to show how especially on the macro or even down to the micro time frame, price really respects the 618 retracement. So we have the bear market of 2018, and you can see on this, off the lows, price rallies all the way up into a 618 retracement right there. Sells off. I'll go down to a weekly chart, see what it looks like on the weekly. Yeah, you can see just the precision that it hits that 618 retracement with is, it's almost so precise that it has to be driven by algorithms. And by that, I mean, machines that trade on behalf of traders that are programmed to trade the 618. I can't prove it, but I do have a suspicion that algorithms are programmed to trade the 618. You can see here, so even price swings within price swings operate off the 618. So you see price comes up, hits the bearish retracement, sells down into the 618 retracement of this. And again, you may think, well, this isn't 618 full 618 retracement. It should be lower. Well, that's actually due to the logarithmic setting on the chart. So if you were to go to standard, then you can see that it is in fact the 618. It's just when you use the high time frames and the logarithmic chart, the exponential time frames kind of distort that in Bitcoin, but it's still valid, regardless on what you chart it on. And now again, so it's my opinion that this price action would have continued if not for the Black Swan event of March 2020. Again, I don't pay too much attention to this during my back testing, just because Black Swan events just when a Black Swan event happens, you just throw all your TA out the window. It doesn't matter. So I think, if we never had the Black Swan event, this probably price would have continued on, kept going. Interesting thing here is that, price really reclaimed the level here, right? And sometimes people ask, well, where do I anchor my fib from? Well, it's the idea to anchor it is, we've covered videos previously about a point of release or a point of origin, right? The base of a swing leading to an impulsive move. So if you can identify the base of if you can go to those point of release videos, point of origin videos, and correctly identify those levels, then it's just going to be the low attached to those levels. So in this case, right, price reclaims this level, and then this is the point of origin for the parabolic rally, right? So you could anchor a fib here, and now you'll really see how the 618 retracement is distorted by logarithmic, right? So price fully retraces from the spring highs into a 618 retracement. This is the distortion of the logarithmic. But again, we can go down to a normal chart and see kind of that distinction right here. But go back to the log chart. You can see as well here, price comes down. So if we do you have this macro price swing here from this accumulation bottom to the top here. So in this case, I'm looking at these lows because you have your range here down to here. So that's your range. So these highs and these lows, they don't change the liquid range, right? They're still operating within the range, right? You don't want to take trades within the range. So, while these areas may be breaching liquidity significantly on the lower time frames, within the context of the macro, they're still just in the middle of the range. So it's important to understand that, especially when you're deciding where to anchor your fibs. But then price runs up and changes the range, right, by taking out these highs. So now this is your new macro range. We can draw a 618 from these lows up to these highs. And you can see here, price comes down, hits the 618, doesn't offer a complete complete bottom, but it does offer a very solid reaction. And in fact, when you lose the 618, that's when, if you had your exponential moving averages on, you would see the exponential moving averages tend to turn around. So that's kind of a pattern you see in the market, and incorporating different methodologies to understand what's going on. A lot of times when price will offer a reaction off the 618, run up into a 382. In this case, it didn't do that, but typically, in markets with less heavy sell pressure, it will. But then if you see the reaction off the 618 get lost by price, then that's typically where you see your moving averages turn around, and then you see this type of drifting for lower liquidity to the downside. Now, if we go to a daily chart, we can also see the same distinctions on a daily chart. Just going back. So let's see. Yeah, you have the distinction here, right? So price is in a very volatile downtrend with heavy sell pressure, and then a series of lower highs. But then price does something different, comes down to a high time frame level, starts taking out the highs. You can draw a 618 retracement from there. Again, this is a good, we talked about how the black swan event affected the data. And again, price action isn't going to be perfect, right? So here, it came down, offered a reaction off the 618. Well, then what happened the next day? Well, Russia invaded Ukraine. So again, sometimes the real world does affect the market, and technicals are not going to play out perfectly. There's so many influences on the market, but in general, this is a pattern that plays out over and over. You can see here, if you were to draw a 618 from this macro swing here, let's see, if we go to a weekly chart, you see it's better. So you see, again, here's an example of where the 618 retracement does play out. Comes up, hits the retracement, sells off into probably a 382, or this high right here, bases off the high, runs up. This is a very good example of a 618 retracement. It's actually a trade I took here. So the ideal area to take a 618 trade is after a market structure break. And this is typically a pattern you see on the low time frames. It's really rare you see this on a daily time frame, but here, this is a play that I saw. So I saw that you got higher highs, higher lows on the weekly. Admittedly, a distribution pattern. Now, people may have different opinions of where the market structure broke. You could argue that it broke here. I would actually argue that it didn't break until you broke this level here, and here's my reasoning for that, because you have this liquid range. So you just follow the liquidity, right? So price runs up above this level, bounces off the base here, then runs up above the liquidity here, sets in a low. Then this low is the low that runs up above this liquidity up here. So you have your liquid range here, new liquid range here. But you certainly could make the argument that violating these lows was a big warning sign. But either way, you clearly break structure, and then you have a 618 retracement. And I actually took this short. Now, admittedly, I closed the short way too early. I didn't catch any of this final move. I actually closed it below these lows right here. I didn't expect this volatility. And actually, this move here was the move that taught me to always leave a portion of the trade open, right? Because even though I had a very profitable trade, I closed it way too early, and it really sucked not being able to participate in this move. Here's another good example of even when it didn't work out. So sometimes it's good to focus on times when the trade didn't necessarily work out perfectly, but it did still give you a reaction even when it didn't work out, right? So here you have this, you may be looking at this and thinking, okay, we have lower lows, right? We have a daily downtrend forming. That's a great place to start looking for a 618 retracement. You come up, get your 618 retracement. And even though it didn't ultimately work out, it gave you a very solid reaction, right? About $3,000 of price action. Well, actually more. It tested down here, so 5,000. And, look, if you draw another 618 here, so runs up into this 618, draws down into this 618, then it's a battle of the bulls and the bears. Bulls win. The rest is history. Let's keep going. Here's a good example. Price comes up, fills this extension. Well, actually here, so you have price changing around, right? Distribution pattern here comes down, violates these lows, just barely violates them, but still violates them. Comes up into a 618 retracement, crashes through the lows, comes up, fills this retracement. Let's see if this was a 618. Maybe, not quite. Comes up, fills that extension, and then you have another 618 retracement right here. See, it's like price is very fractal, right? Comes in. So you can see that you got a narrowing range here, right? Running into 618 retracements. This is probably a 618 retracement right here. So you can see how this characterizes and these are all very tradable, but it characterizes a consolidating range. Price gets wedged, and then it's forced to make a decision. Bulls ultimately win. The rest is history. Again, you have a 618 retracement from here as well. Right down into that level. There's your low. And then you get these a swing upon swing upon swing, and you see how this characterizes the higher lows until the ultimate break. Run up above these. I did a previous video of how it's really this high and not that high that you want to look at for break. But ultimately, in this case, it doesn't matter. You get the break above. Yeah, and same thing here. I mean, you got a swing here, 618 retracement. You can see here, even running up, running above, selling right down, selling into the 618. Immediate reaction doesn't form an instant bottom, but offers a reaction, right? Black swan events here are not going to be ideal, but even then you probably see a reaction as some type of 618 in there. Yeah, a little bit of sell pressure right there, but nothing crazy. Again, it's a black swan event. Here you see it here. So here, price is turning around. That would be a 618 retracement right there into this level. Run up. And what's happening here, this is an inverted head and shoulder pattern. I won't run through that now, but essentially what you have is you have your shoulder, head, shoulder. I don't have the volume profile up, but the volume profile would show declining volume, and then you get a break, and then the break would have increasing volume at the 618 and breaks up. This is probably a 618 retracement right here somehow. Not really. This is weird price action. And even going back to the bear market, right? A lot of these lower highs probably also characterize 618 retracements. If you were to draw it from here to here, well, not quite. Let's see, here to here. There you got your lower high. Lower high. Again, it's just a useful way to frame the context of price action. I think the 618 represents an area of the market where you're likely to see a reaction, but if you demand a bottom form or a top form at that area, you know, that's going to be as much edge as there is at the 618. Placing that rigid of an expectation isn't going to, you have to be able to trade dynamically. A lot of times the 618 will give you a quick scalp, and then that scalp will give you the opportunity to, manage the trade dynamically, even if there is another push lower. Anyway, I hope you guys found this video useful. Again, just trying to give you a source of edge, something that's useful for me. If you guys like this content, please make sure to subscribe to the channel, like the video, and I'll catch you guys in the next one.